All right, so let's go over some accumulation and distribution and all of that. So again, I know that the market's in trouble because, as I showed you all yesterday, market breadth on the Nasdaq. This is very significant, and this is just market breadth. What happens is when this happens, you get a downtrend in the market. So when you're selling, you get a downtrend. When you're buying, you get an uptrend. Now you're selling again. Like over here, buying went up, selling went down, buying went up, selling. Uh-oh. So, and those are that works on on the daily chart. So that's, it gives me a very good idea about what's going on. Anyway, so today, yeah, for the intraday stuff, I'm going to show some trades, some basically accumulation or distribution. The idea is for a directional trader. For a directional trader, you have a very simple diagram. It's far more easier than the other schematics. The real diagram. Right? You have accumulation, and you have markup, then you have distribution, and you have markdown. It's really it's the, what is it called, cycle, right? Accumulation, markup, distribution, markdown. So the idea is to diagnose accumulation so you can get that markup. That's your objective. Get that markup. Then diagnose distribution in order to get that markdown. All right. So this is the Wyckoff, like what he really did talk about and put in his course was this, like the accumulation, markup, and all that. He was really big on this. And when he talked about climaxes and change of behavior and whatever, we're just talking about the, in the accumulation phase, which would then lead to confirmation of the markup phase and so on and so forth. All right. Anyway, so let's talk about this. All right. So I'll show some accumulation that sometimes it will fail or there'll be a shakeout. So first, let's go over accumulation in the ES today. So market is puking down, right? Generally, I do not want to get in because it's puking. It's going down, right? But what happened was the market got oversold. Where did it get oversold? Right here, all right? And it was springing this low. It was springing that low. That low right there was in a spring position, oversold, boom. And then this rally came in. So it was a no-brainer that delete all this. It was a no-brainer that this is then I need to take a look at this. So I'm looking at this, and it starts moving sideways. You have climactic action. 49,000 contracts right there. 49,000 contracts. No follow through, instead you get a reversal. 49,000 contracts, no follow through, instead you get a reversal. So on the bar chart or wave chart, it's oversold. Grab the oversold. Has a climax. I would not touch this with a 10-foot pole if it didn't have that climactic action. These white boxes here told me that someone is going to bounce the market. I don't know how big the bounce is going to be. I don't know how far it's going to be. All I know is it could be a temporary or a little bit longer and then get sold off again, which it did the end of day. All right. So does this climactic action, does all this, whatever. Right? And then I get these base signals. Right? Takes out the high with a higher high. And then, I don't know where it was that I got really bullish, but I forgot where it was where I got really bullish. But anyway, so market goes up, goes down. You had initial buying here. Now, here's the thing. you have to know where the hell to put your stop. I talked about it in the last video about fear of loss. Believe me, when you watch something like this in real time and you see bullish, 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 1, 2, 3, 4 green bars, another thrusting up and whatever, you're very, very tempted to buy it on a test of this level right up here. You're very tempted to get in here, but don't fall for it, because you have what is it called? This right here is creek. That high, that point, that's creek. All right. So market gets oversold. You have the spring attempting to go down, retest, and goes up. And I know it's you have very strong intuition that it's going to go higher. I don't know how high, but it's going to go higher. I see the climaxes over here. I see no follow through to the downside. Instead, I see a higher high. And biggest price volume waves. Biggest price wave in 22 waves. Biggest volume wave in over 49 waves. So the buying is coming in with authority. So it tests this area. So I know it's going to, some selling. Now the mistake would be to buy at this level. That's the mistake, because you're going to go through a lot of pain, and chances are you're going to get stopped out. Because when trading this, most folks will not put their stop below the low. Most folks would look for a wick and they put it under there because it's a lot of risk. And they taught like what? Keep your stop tight or something like that. Keep yours tight. Yeah, something anyway. So then the market pulls back here and they see this green candle. Again, once you have this green candle with a wick and that follow through, where's the stops? This is the real reason why people get railroaded, and they get stopped out before getting the move. The stops were moved here, right there. The stops are there. I know they're there, because this is psychological. All right, meaning you see the rally, you see the pullback, you see the big wick, boom, boom. Right there. If your stop is here, which is probably not, because you got getting around this green candle, like around here or a little bit higher, get in, right? And so if your stop is here, for sure you're gonna be taken, because you think, okay, this is gonna go. Why? Because this big bar has good range, and then you have this good range, all of that. So these guys, where these red bars are, they were already taken, right? They were already taken. See, one red bar, two these lows, they were taken by the pullback. Then you have this green and green, because you think it's bouncing off of this green candle. So where are the stops? Right under here. What happens? They get dug into. Now here's the thing that I was really, really surprised. I thought they were going to take this low too, right over here. But surprisingly, it went one tick above that low. All right, this low was 438.525, and this thing was 438.550. One tick was all. I thought it was definitely gonna take it, but because that's what it does. All right, but the point is they already screwed on the pullback here and on the pullback here, and then they just ran it. Okay. So you cannot trade this market without controlling two things: FOMO, fear of loss. There's no way. You back test all you want. And then what happened? Market went up here, took out this area, right there. And then it fell rather slow. So where's the accumulation in all this? It's right here. There's the accumulation. How do you know it's accumulation? Look for bases. I said so many times, look for bases. You got the base, you got the break. This break was biggest in 7 columns. We had some base and makes the higher highs, but again, doesn't mean shit because it can go right back down. There was something else that I saw here. It was like some low volume testing. I don't know why I can't see it. Maybe, I don't know where it was, but anyway. So the base crack, 1, 2, 3, 4. And then this was the deep test, because you know that ES has a tendency to do that. When it pulls back, it basically goes to the zones, the the demand zone, the deep test. But what it'll do is it'll set up some lows first. For example, it always does this. You see this low? It sets that low up and then it drives below it. So basically it's a spring. And then it rallied. Right? Rallied and went up here. So the key here was to know that, you know, it's going to take this area out. Anyway, it really should have gone higher, but the reason why it didn't is because we're in the downtrend. Yeah, I thought that it was going to spring this low and go up a lot, but there's something wrong with the market in terms of the sellers taking over the buyers. I mean, I showed you this, right? This selling right here this is no joke. This is if this pullback hits a springboard, whatever right here, it's going to. I would say I think it's going to go lower. Okay. So we're done with the accumulation here, and the markup wasn't really good markup. It was really shitty markup, but that's what you get when you counter trend. They always have small markup. Anyway, let's go to the next market. This again is a real screw job. I'll show you how this was played. All right. First of all, the level before it went down, right? It was at this level, basically in a potential spring position, right there. It already took out the first demand low, and I'm seeing it's going to take out this demand zone low. All right, now, so it was right here. So I can tell there's accumulation here. Why? You have a nice base, you have a high, you have a higher high, and here, ooh, it was looking. This was the one that I was that really. The only problem here was the damn thing didn't have high volume prints, like those white boxes. If it has those white boxes, guess what? It would have gone up. But instead, because they would have held, instead the sellers came in for a drive. This right here is a shakeout. Many times in accumulation, you will have a shakeout. This is how an intraday shakeout looks. Take a good look at this. Look how it looks. You have accumulation here, you have a base forming, you have a high, breaks the high. The POC before it was that high, it was here. It was 32,959. I mean, it wasn't that high, but there was POC was there, which means they were accumulating this line. But then what happened is they decided to do this shakeout. This here is a shakeout, and there's nothing you can do about this other than get stopped out. There's absolutely nothing you can do about this. This here was a shakeout. It got into oversold. What happened? Rallied. Testing, go. See? What? Right here, hold, 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 hold. Break out some low volume pullback action right here. You know, right here is low volume pullback, and then the final move up. If you miss the accumulation or get stopped out, you hit the low volume pullback. Up here, we got another base breakout. 53 goes up 69. Low volume right here, 23. The 23 is very telling. Why is it telling? Because the volume diminishes and it's less than the up volume. So you have a shot at continuing the markup. And that's what happened. So again, this is the accumulation structure with a shakeout. And you see this happens intraday as well. This is exactly it. Why I knew this was, because once you have the base, high, POC, but the damn thing didn't have high volume prints. The only other really bullish activity, you see this? And this. So up wave or up bar is on 64. First pullback, 37. That's like, it's a little more than half. Second pullback, 27. Bullish, bullish. Why? Both have less volume and decreasing volume, setting the stage for a move. And this is actually why you have the shakeout, and then a lot of times you will have that where you have low volume pullback or some very bullish indication. In that case, they shake everyone out and then they go. So there's nothing you can do about that. You just have to know how to re-enter and just get ready for it. Okay, now the final one. Now again, this was against the spring, but these springs are at the ultimate support low, and I don't like those because it's much better if you have like pullback springs. Not like the spring of the rally, but the spring of the pullback. Like the ABC corrections, they're really good. Okay? Now I'm going to show you a distribution structure. First thing to know, this was the only trade that was with trend. This was a trading opportunity, but it's with trend. Okay, and what do you know? Well, when you trade with trend, in my opinion and in my experiences, you have less shakeouts. Of course, higher probability. And most important, your reward is always bigger. If you do counter trend trading, the reward always is smaller. But with trend trades, if nothing else, the reward is always bigger. I don't know. It's just that's what happens. Yeah. With the counter trend trading, what happens is they typically just go to a level, like a support resistance level. It's just a pullback to those levels, and the pullbacks will always be smaller than rallies. That's why counter trend trades are the pullbacks. Trend trades are rallies. Anyway, basically market got overbought. Well, the first thing to note though, before we even go there, this was the last supply zone or supply level right here. Okay? Now, the best thing to do is get in the pullback now. You have a supply zone, get that pullback. What happens is it overshoots right into the supply area. Okay? In here, what happened? You had a base right there. All this base. 1, 2, 3, 4. Now, You had some climactic action. It's not extremely clear, but here it is. I wanted it to be up here. You know, it's a little over there. You know, I'd rather it be up here. That's really, really bullish. I mean, bearish. So the only thing that validated it was this, the 31. Right there. Because this is a high volume print, and what happened after that was a break. What does that mean? Bag holding. That's bag holding. Because if it's bullish, why is it going the other way? On the biggest break, biggest bar in 15 bars. You see? So and what happened? Pull back and puke. And you see how nice the trade is. It's how nice. It's lengthier. It's the reward is always bigger. Why? Because it's with trend. The counter trend trades always have poor reward. This is the problem with counter trend trading. So here you go. This right here is distribution. How do you know? You need to see a base. You need to see climactic action, change of behavior, or some type of high volume print. You should also see a POC. I mean, it's to some degree it's here. Like they did 12,428 contracts up here. And then you need to see a break. Right there. Break. And go down. Out of all the three, the trades that really should be taken is this one. Again, why? It's with trend. Trend, the reward is greater, and almost usually less chances for a shakeout. That's what happens. When you trade with trend, there's less chances for shakeout. When you trade against trend, you'll get more shakeouts. I mean, that's what I'm observing again and again. So, all right. So this was the distribution and all the other stuff. All right. That's all, folks. Take care. Have a good weekend. Bye.